A rather interesting situation is unfolding in the financial markets. If you look at the US stock market, it is hitting all-time highs with enviable regularity. Well, if you look at the S&P 500 Nasdaq, the last time this happened was after a fairly significant drop. Take a look at the reviews for Tesla and Nvidia. Tesla dropped by 40%, Nvidia fell by 20%. It was quite a sell-off. So after that, this week the S&P 500 set a new all-time high again. If you look at the cryptocurrency market at its leader, the trendsetter so to speak, Bitcoin, then everything here is very sad and dismal. Down 50% from its all-time high. And if we talk about altcoins, then you need to take out a handkerchief and wipe the tears from your face. And let's see in this review what the chances are for Bitcoin and consequently for altcoins to see a dinosaur, that is to follow the stock market and head significantly higher than the current $64,634. Or the second option is that from current levels we could follow the stock market downwards, but that is on the condition that the stock market goes down. Because Bitcoin reacts very sensitively to any sharp decline in the S&P 500 index, while essentially not reacting at all to its significant growth. Now let's look at the chart. Before us are daily candles. A quite interesting moment. Pay attention. We have a white level at $64,780. This is the opening point of the large bearish candle, orange or red, whichever you prefer, from July 31st. This candle is notable for the fact that it took us below the 50-day moving average. It engulfed the 3 days of growth that preceded it and effectively signaled a downward direction. And in order to talk about or at least assume any kind of growth for Bitcoin, we must close the day above the opening point of the candle from July 31st, that is, above the level of $64,780.03. If this happens, then the next resistance is $66,328, or the closing point of the green candle from June 15th. We tested this level on July 24th, but as you can see, we went down after that. Accordingly, right now, 64,780 is the first defining level, and 66,328 is the second. But if we suddenly see that without breaking above 64,780, one of the daily candles engulfs the growth candle, for example, from August 5th, and closes below its body, then that will be a very bad signal, pointing to a decline to the area of $63,332. And potentially down the ladder to 62,290, 60,884, and then somewhere further into the 59,000 minus range. Therefore, we are now watching very closely what is happening on the daily candles. Yes, I don't rule out the possibility that we might see a very powerful breakout to the upside or a very powerful breakout to the downside, so there won't be an entry point. But if you want to take a risk, then go ahead and open your position, whether it's short or long, but make sure to use a stop loss. If you suddenly, though I don't recommend doing this, I would wait for confirmation, but if you suddenly want to open a short from current levels, which does have some merit, then I would place the stop loss above the high of the July 31st candle. And if you want to open a long, then I would place the stop loss below yesterday's low. That's all. Yesterday was August 5th, in case you aren't sure about the date when this video was released. If the growth continues, yes, and we break above 66,328, then the doors open to the $68,000 area towards the 100-day moving average, to the $70,000 area, which is the 200-day, and to the $71,500 area, which is this dashed trend line. It's plotted based on monthly candles, and we will switch to them now. I will remove all the markings, or let me bring it back for a second so you can just see how this dashed trend line is constructed. Here is one pivot point in the circle, and here is the second one. We broke below it, and that happened right in June, and we might test it and then continue moving downwards. Actually, the structure of the monthly candles points towards a continued decline, but it doesn't rule out a correction to the opening point of the June candle, which is approximately $73,500. We also have a second very important level. I've moved my mouse over it. That is $71,500. Why? Because this is the upper boundary of the range where Bitcoin was hovering somewhere in the middle of 2024, unable to break through this boundary for a whole 8 months. Look here, the green candle formed a level, and then let's count. 1, 2, 3, 4, 5, 6, 7. Well, it couldn't do it for 7, but it managed to on the 8th. So accordingly, the area from $71.5 to approximately $73.5 to $74,000 is a potentially possible growth zone for Bitcoin, but on the condition that we break through two resistance levels on the daily time frame. Now let's look at the weekly candles. Here too the situation has become complicated. It was actually quite a high quality bullish one. Why? Because here, the week of June 29th formed a bullish engulfing pattern after hitting a multi-month low, essentially a yearly one. This is such a classic reversal candle. It closed above the 200-week moving average, set the nearest growth target right here on the candle from June 8 at its closing point of 65,800, but we have already reached this level. And the next point after that is first of all the opening of the weekly candle from June 1st. Well, it's still the same $73.5, $74,000. And potentially the 50-week moving average is in the area of 82,000 because it's declining, right? I mean, we won't arrive or jump there in just 1 week, if it even happens at all. But why am I saying that the situation has become complicated and ambiguous? Because we closed the previous week with a red body engulfing 3 growth candles by body. 3 weeks of growth were wiped out by just 1 week of decline. That is a very bad signal. The only positive thing here is that this week, the previous red week, yes, closed clearly above the 200-week moving average. That is, it did not break through it, and therefore, from the perspective of weekly candles, we need to close above the opening point of last week, which is 65,400, in order to talk about us growing somewhere towards the area of $73.5 to $74,000. By and large, I can add only one thing to this review. It is made on the QuantFury platform where I open all my positions. I don't pay any commissions for opening, closing, or holding positions. Exactly 0 additional costs or fees. At the same time, you can trade the stock market, cryptocurrency market, ETFs, indices, commodities, oil, gold, gas, the forex market, and much more. The QR code is on the screen. Join my company. The QuantFury platform is the best thing I can recommend for trading. The next review will likely be on one of the US stock market shares. As for the indices, I have basically laid out the situation in previous videos. Subscribe to the channel, leave comments. See you next time. Goodbye.